Welcome to That Business Show 2.0 with your host, Jamie Maloney, where business becomes show business. Today, we're going to be talking about the mortgage business with my guest, Sam Wax. He's the president of My Easy Mortgage. Learn more at that site, myeasymortgage.com. So, Sam, welcome to the program today.
Thanks so much for having me, Jamie. I really appreciate it.
So, tell us a little bit about your background. 20 years in the mortgage business.
Been doing this longer than I remember, longer than I've been alive.
Right.
We just put thousands of happy people into homes or help them reduce their payments so that they can, let's face it,
right.
Really what I do is help people live a better life.
Okay. Now, 20 years in the mortgage business, a lot of mortgage professionals didn't survive, some of those turbulent times, 2005, 2006, we had the financial crisis and everything. Talk to me about just sustainability in this business, because I'm a realtor and I've seen a lot of mortgage brokers and professionals come and go. How have you been able to sustain yourself in the business?
Well, unfortunately, the barrier to entry in our industry is actually not as extreme as it should be. To pass a test isn't, it's not
the same with the real estate agent, and I've talked about that a number of times.
Absolutely.
But still, the sustainability, though, 20 years, I don't see a lot of loan officers or mortgage brokers or bankers with 20 years of experience. So you used to survive turbulent times.
If you do what you say you're going to do, and you treat people right, and you give them a really good product, then you get referrals. And referrals are the best way to do business, and that's generally how we've done all of our business. So your business
is referral-based primarily? That's where your new business comes in from? I know I talk about this on the program a lot, the ways to generate business. The referral is the best thing.
It is. In the beginning, it was all financial advisors and insurance agents. They knew us as really the best deal for their clients. And then eventually, about 5 years in, realtors started recognizing that we were really I was the best person to refer business to.
Right.
And now it's just past clients and realtors and financial advisors and brother-in-laws and sister-in-laws, and you name them, they're coming to us.
What's out there on the mortgage markets today? You mentioned a new 1% down product. Talk to us about this.
That's right. So Fannie Mae and Freddie Mac have both come out with a 1% down program, Home Possible or Home Ready. And so if you have a typical rent, what's a typical rent today?
Typical rent, $1,300, $1,400.
$1,400.
Yeah.
If you can come up with $1,300 or $1,400, you may be able to buy a $1,300 to $1,400 home.
Yes.
$130,000 to $140,000 home.
I was going to say, I know there's a lot of situations right now where people are paying more in rent than what they can pay to a mortgage or property, and a lot of people are, the credit worthiness isn't as good as what it used to be. There's also the mindset in the millennials where they don't think home ownership is necessarily a good in an investment. How do you coax those people to at least come out of the woodwork and apply and try?
Generally it's people that are starting a family. So we closed 184 transactions last year. And out of 184, a lot of them were, most were purchases, almost 80% were purchases, and most of them were, we just got married, we just had a baby, what's the next step? Or we just got married and we want to have a baby, what's the next step? And so we found that millennials that are now starting to settle down have been amazing clients for us.
1% down, is this a conventional loan product?
Yes.
Then talk to me about how this differs from like a 3% down, 3.5% down FHA mortgage and your typical conventional loans that are 5, 10, 20% down.
So Fannie Mae and Freddie Mac both have the 3% down program, and one of the investors, we write business with about 40 different investors. One of the investors in particular offers a gift of up to $5,000 to a client. No effect on their interest rate, and it's under the 3% down program for Fannie Mae or Freddie Mac. And so on a $250,000 purchase, effectively, they're putting down 1%. Now, we're known in Tampa Bay as just a great deal. So somebody doesn't have to have perfect credit, but generally, if you've got good credit, we're a great place to go. And that's, you have to have decent credit, 720 credit score, but if the barrier to entry is only 1%, is your down payment, 1%, most people can come up with 1%.
Then with people with a 720 score, I mean, that's a pretty good score to have. Usually those people have more money to put down. Can they also, is it advantageous for them to maybe put more money down, or would you move them to a different loan product if they had more money to put down?
You know, I'm a big fan of putting down as little money as possible, especially if you don't have 6 months worth of savings set in your checking and savings accounts, which a lot of people don't. Because interest rates are so low right now, take advantage of it. And there's no prepayment penalties on any of these loans. You could always pay them down early.
The idea of the prepayment penalty, I've been in the business the last 10 years. I don't see any loans out there really with prepayment penalties. Educate me a little bit, though. Are there prepayment penalties on any loans out there that people should be paying attention to?
Some of the subprime loans, so if you've got bad credit, or if you can't verify your income through traditional means, and we're using deposits on bank statements in order to prove out your income, then some of the lenders that are out there have prepays. But as a trusted loan officer, I make sure that the client knows about them. And if it's not the right situation for the client, I've got other investors that we're able to pair that loan up with.
Now, I've been talking to my program about the return of subprime a lot. What are you seeing out there? Is there really a big return to subprime lending?
So we're not known as your low credit score guys. I mean, granted, I've done a VA loan at a 550 last year and FHA down to a 580, but that's not really what we're known for. Really, it has to do with ATR. So ATR is the ability to repay. So you have to, in most cases, your stated income, your no income, which is one of the main reasons that we got into trouble in the late 2000s.
Right.
The ability to repay rule, you have to be able to prove out how are you going to repay that loan. So it's either through traditional means, W-2s, pay stubs, tax returns, so on and so forth, or some of the subprime lenders that are out there will accept bank statements, deposits on bank statements as proof of income. So we'll average either personal or business bank statements in order to prove out your income.
Now, this is unique from what I see in Tampa Bay. Most loan officers, they'll do any type of loan, you know, in the books, but you keep yourself to the higher standard, the higher quality of loans, and it appears. So if I come to you and ask you about subprime, you're going to direct me into another direction, it sounds like. Am I correct?
So one of the advantages of my background working with financial advisors in the beginning is, and really caring about people, is not trying to just slam them into a house. If they're not ready, they're not ready. If they haven't saved up any money at all, I'm not a huge down payment assistance guy. I like for people to be able to put some money down, some skin in the game, even if it's in the 1% program. But if their credit's bad, you know what? If your credit's bad, then work towards fixing it.
Right.
Work towards showing the investors and the lenders that are out there that you have the ability to pay back your bills on time.
What is a good minimum credit score for somebody who's considering buying a home for the first time, that they can come into the mortgage market and get a respectable loan on a property? Is it 680? Is it 620? Where should people be shooting for that first time mortgage?
Jamie, that's a great question. I like the idea of somebody in the mid-sixes. And a lot of times people come in and they'll say, hey, you know what, I have a great example. I have a client who called up yesterday. She had been denied by 5 other mortgage companies. She said, my credit score is under 500. And normally somebody says, hey, my credit score is under 500. I'm not going to spend that much time on them. But she's in the Air Force, and she's a medic. And I said, okay, you know what? I love helping nurses based on family history and of different illnesses and stuff. And I love helping our military. And so she said, there's no way I'm getting a VA loan because my credit score is in a 620.
Right.
Well, VA doesn't have a guideline on your credit score. Those are overlays, and you've mentioned this on your program before. Those are overlays based on whoever the investor is who is going to write the loan. I said, look, there's no reason why we can't pull your credit just to see where you are. That credit inquiry is not going to hurt your credit at this point. So I pulled her credit. She has a 511 credit score. She has $60,000 in the bank right now in reserves. And the reason that her credit score was so low is she was deployed and her automatic bill pay didn't hit. We're going to be able to get her a VA loan.
Right. So
With
is
a
this
511 credit score.
So is it a matter she's going to have to pay some things down and go into those reserves, or what?
No, just the fact that she has the reserves, and this investor loves the fact that she has saved up money. She's a saver.
Right.
And the fact that she got deployed and things weren't set up properly, really, whether it was her fault or not, just an unfortunate circumstance.
Very nice. I know it's a common misconception that VA and FHA have minimum credit scores, but what a lot of people don't understand is those are insurance for a lender, and then the lender can, as you use, overlay with their own, criteria, minimum credit scores or down payments that they could, put into place. But
Exactly.
the FHA and the VA are there to insure the banks against defaults. There's other things that are put on place, and I find that misconception on. Really, I didn't even learn that until really the last year or so. I even had that misconception that an FHA loan had a 620 score. I used to think that it was like a 620 score for some reason, but it's not. And so, a 511 credit score, you're getting somebody a mortgage.
Your conventional loans, you've got a hard stop at 620.
Right.
The systems won't take them otherwise. But our average credit score last year was a 711. And what we attribute that to, and the reason that we're proud of that, is we're getting high quality clients that are coming to us because really we're a great deal. We don't charge any junk fees as a lender, as a broker. So when they come to us and they're showing me an estimate from any of the big banks or credit union or anyone else, I don't have the admin fees. I don't have the underwriting fees. I don't have the processing fees. I don't have the any of the junk that's out there.
There's a lot of different fees though, associated with the typical
My
mortgage.
whole industry is a shell game. I hate to say that, but it's true. If you go online and you say, hey, what's a great interest rate today? Well, this shell here is just hypothetically is a 4% rate. And then this one is a 4 1/8, and this one's 4 1/4. Now, what's the difference between the three? Well, this guy's charging this guy's charging this, and this person's providing a rebate. But it's how they market themselves on what people think is a great deal or not a great deal.
Because at the end of the day, and it's an easy thing to run a sham on, all people care about is what's my monthly payment.
What's my monthly
That's
payment?
the only thing they care about.
And how am I going to pay this thing off?
Yeah.
See, that really should be the biggest thing that most people look at is when you buy a home, you should be concentrating on, great, can I afford the monthly payment? And can I get into the house based on my down payment? But also, how am I going to pay the thing off? Because at the end of the day, that really should be the goal in home ownership, is actually owning the home and not having a mortgage.
Currently talking to Sam Wax, president of My Easy Mortgage. Learn more at that website, myeasymortgage.com. We got a lot more with him when we come back from the break on That Business Show 2.0 with your host, Jamie Maloney, where business becomes show business.
Hi, welcome to Yeager's. We just want to take a minute and show you what we're all about. At Yeager's, our primary business is hardwood flooring, although we are remodelers for kitchen, bath, and general construction. We operate a fleet of shop-at-home vans that have all the flooring type products, hardwood flooring, laminate flooring, tiles, stone, what have you. So we're able to come out first with products in our vehicles and take a look at the setting, how the colors will work, and then to be able to come up with some options and ideas for you. If that's not good enough, we have a large distribution center that we inventory product and have a nice display area.
And we're back to That Business Show 2.0 with your host, Jamie Maloney, where business becomes show business. Today, we're talking about the mortgage business with Sam Wax, president of My Easy Mortgage. Learn more at myeasymortgage.com. Sam, let's talk a little bit about your team, the people that you work with. You've developed a great team of loan officers, processors. You even have some flexibility in the schedules. Talk to us about this.
So in my industry, typically you're working somebody, if you call somebody to get a mortgage, it's generally a 9 to 5 person. I don't believe in that. I think that there's a lot of other opportunities out there. If you're working from 9 to 5, you need to be able to reach somebody after 5 o'clock. Generally, you can reach me in the evenings or the weekends, but more importantly, you can reach my processing team after 5 o'clock. We have a second shift. So even though we're only licensed here in Florida, we don't have to worry about the west coast of the U.S. We've set it up. We've eliminated a lot of red tape, but my team is awesome. I've got a big family within the office. I've got a lot of experience, years and years of experience. Some who worked for large lenders in the past, and people that really truly care about getting somebody to the finish line, getting them from point A to point B, and not just sending them documents and saying, hey, sign this and send us this stuff, but explaining, here's what you're signing and here's why we need these different documents.
And you also have a very secure website. People can transmit documents to and from through myeasymortgage.com?
We do, Jamie. One of the greatest things that we've set up is on our website, one of the people in the office had an idea of people shouldn't just be emailing their Social Security number and their
I wonder
bank
about that a lot too. People are pretty free with that. I could ask somebody for that information and they'll send it right over to me. They trust me and everything. That's good, but you can't trust the internet.
You can't trust all the hackers out there.
Right, absolutely.
So on our website, we have an upload document where somebody can securely and encrypted drag and drop documents that they would send over to us.
Very cool. myeasymortgage.com. Can people apply on the website or do they need to pick up the phone and talk to somebody?
They can apply on the website, but I got to be honest. I'm always honest. It's always easier to take an application over the phone and help. You never know. You might wind up doing the application, and then all of a sudden in the middle of the application you say, oh, I forgot about this. And then all of a sudden we're talking about this loan program, and we need to migrate over to another loan program. It's easier to do it all in one shot. I can take a loan application over the phone in 10 or 15 minutes and generally get somebody pre-approved within about a half an hour.
Half an hour, get somebody ready to rock and roll and stuff.
And an actual pre-approval, not a pre-qualification.
Yeah, we talk about that on the program a lot of times.
Absolutely.
And everything. The pre-qual is basically you just run their credit report and you give them a yay or nay. But what's involved with the pre-approval process at your office?
So pre-approval is running credit, taking a complete application, getting income, asset, and other documents sent over. So if somebody says, hey, I've got alimony, great, I need your divorce decree.
Right.
Or I have unreimbursed business expenses on my tax return. Great, I got to review your tax return and actually calculate your income first. Because as a realtor, you'll appreciate this. You don't want to go out and show somebody 100 houses and then all of a sudden, boom, something goes wrong.
Oh yeah, we talk about that a lot on this program. In addition, they want to be fully approved because 50% of our market is cash.
Yes.
And so if you're going, competing in a lot of homes are getting multiple offers, and you're up against cash offers, you need to be able to tell that seller that, hey, I'm fully loan approved. The only things that are conditions I need are, basically on your end, appraisal and clear title of the property. And I've stressed that on a number of my programs. That selling agents really need to coach their buyers, get that full loan approval, and then the selling agents need to know how to drive that point home in negotiations when they're up against those cash offers, especially with the bank stuff that I deal with. If they see a loan and they got a couple, cash offers, they don't even want to, even if the loan offer is higher, they always go to those cash offers first. But if you can tell them, hey, the conditions are appraisal and title only, we can come to close, very quickly.
We keep really good analytics on our loans that close and don't close. And right now we've averaged over the last couple of years almost 95% of the loans that get submitted into processing close.
Wow, that's a good closing ratio.
Only thing that we have to worry about is really the appraisal. But we work with such great and talented realtors that, knock on wood, I hate to say this live, but the last, I don't know, my last 40 or so appraisals have come in for value, or just a couple of them came in for 1,000 or 2,000 less, but it wasn't enough to kick the deal out.
Right. Now, how is the appraisal environment out there? I hear a lot of realtors complaining about low appraisals, or appraisers coming from other areas who aren't experienced in this market. What are you seeing now? You said the last 40 have been good. I mean, but what are others? What are you hearing?
Last 40 have been really good. A lot of the realtors that I speak with, they say the same thing. It's hit or miss. So years ago, Cuomo in New York instituted the HVCC, the Home Valuation Code of Conduct, and from the HVCC, there's been changes to where we are right now, where we don't have any contact directly with the appraiser. It's done through the appraisal management company. So basically, the appraisal management company gets paid an override to be a go-between between the two. I think what we'll see in the next year or two, and this is everything that I've read, all the industry professionals that I've spoken with, is we'll start seeing Fannie Mae and Freddie Mac have amazing algorithms in their software where you'll see more PIWs. PIWs are property inspection waivers, where if it fits within the loan program, an appraisal is not needed. And from everything that I've read, I think that we'll continue to migrate towards that, where we may not even need an appraisal if the system likes the address and likes the valuation and likes the other transactions that are happening. And I think eventually home inspectors may wind up getting some kind of accreditation to just make sure for Fannie Mae or Freddie Mac that the properties exist, and home inspections may wind up being part of the process.
Right now, that's a misconception. An appraisal is not a home inspection.
Correct.
I mean, they'll go and may cite a few things that an inspector would, but it's not a detailed home inspection, which is a common misconception from a lot of first-time buyers, is that they got to get a inspection of the home. That's really for you. They usually need to get the appraisal. But you touched on the idea of the automated valuation features, and so you think down the line. I've always wondered, because you see the Zillows out there that have the Zestimate, but can you ever get to where automated valuation on homes is accurate enough to trust lending on?
Well, if you're buying the house and you have to trust your realtor, you have to trust your buyer's agent, and that's one of the reasons not to try to buy a home on your own, is having somebody who truly knows the market, to be able to run comps, somebody who knows construction, like walking around the house, and a good home inspector, but also a good realtor who knows that you're.
But are you saying that Fannie and Freddie will begin to rely strictly on automated valuation features with no human input on the valuation process?
We're already seeing it.
Really?
We're already seeing PIWs.
Wow.
So with Fannie and Freddie. So I think that we'll continue to migrate towards that. And the appraiser that's out there right now, they're already getting squeezed by the appraisal management company. I think that's just going to continue.
Yeah. So the job of the appraiser could be in jeopardy over the next decade?
I think yes. Or they'll wind up having to get some other kind of licensing, or there used to be, with a PIW, you used to have a $75 charge for a drive-by, so that the appraiser simply drove by the property and said, hey, the house is there.
Yeah.
The house is there.
Have you ever compared the automated valuation that you get from Fannie and Freddie to what Zillow is putting out there? Because Zillow in our market is usually pretty high versus what it really should be. Have you ever compared the two? I'm just wondering about the algorithms and the effectiveness of their procedure.
So Zillow is the equivalent of going to freecreditreport.com or Credit Karma, or even looking on your smartphone on Capital One or Discover on your credit score. It's wildly inaccurate.
Yeah.
It's either super high, super low.
It's a big nemesis for us realtors too, because homeowners go there before they call us, and then they want to say, well, Zillow says this. So.
It's great. Zillow is a huge conglomerate company, and they're using an algorithm that at the end of the day, who knows if it's accurate or not? Most of the time it's not. It's the same thing as credit scoring. Somebody calls me up and says, hey, I've got a 700 credit score. Like, great, where did you get it from? Credit Karma. And then I've got to spend the next 15 or 20 minutes explaining that Credit Karma is a consumer score and how there's 8 different variations of this bureau and so on and so forth.
You know, something I learned recently, I was reading an article about, realtors complaining about Zillow, but Zillow has an official policy that they're offering $1 million to anybody who can improve their algorithm and make it more realistic. So for all you developers out there and stuff, there's an opportunity for you. Improve the Zillow algorithm and make the housing valuation better, and you can make yourself $1 million. So that's an official policy on behalf of Zillow.
Going back to the home inspection process. So I've got a closing that's going to happen in about a week or two. The appraisal comes out. The realtor calls me the night before the appraisal is about to come out and says, hey, I just want to see if the appraisal came back. And I said, it should be back in tomorrow morning. She's like, okay, great. And she's like, oh, by the way, just so you know, it was a buyer's agent. I let the appraiser in, and I told him about the roof leak. Told him about the roof leak. What roof leak? Well, she says, yeah, he didn't see a roof leak, but I told him all about the roof leak, and then I provided him with an invoice for the roof leak. Appraisers have no idea. I mean, they're not home inspectors, just like you said.
Yeah. Well, that's happens to deals and stuff sometimes, but nonetheless, My Easy Mortgage, a great place to get a mortgage. Real quick, how do you advise that people contact you? Via phone, email, website? What's the best way to contact you?
Honestly, whatever's best for them. We work with a lot of millennials. We work with a lot of people that are, if you're working a 9-to-5 job, the best, and you don't want your employer to know that you're doing other things, you're multitasking, text me. My cell phone, the 505-7830. Text, cell phone,
all right.
Smoke signals, whatever they want to do.
All right, sounds good. Sam Wax, president of My Easy Mortgage, thank you so much for being with us
Thanks
today.
for having me.
Again, 813-505-7830. Again, 813-505-7830. MyEasyMortgage.com. You've been listening to That Business Show 2.0 with your host, Jamie Maloney, where business becomes show business.